Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to expose velocity banking. No, just kidding. Every time I put like not clickbait, it's a clickbait title. But one of the things I want to talk about is I know a lot of you out there have trouble explaining the velocity banking concept, right? And this is how I want you to explain it. So I don't know if you ever heard of the concept, sell the hole, not the drill. Sell the hole, not the drill, right? And if I were to explain velocity banking to someone, actually wouldn't call it velocity banking. What I would do is I would just do this. So I would say, hey, you know, let's say you had a person with a really good salary, but they're to credit card debt up their eyeballs, right? So if we sum this up, this is $93,000 of credit card debt, and they have a $200,000 mortgage, and if you sum up their income minus expenses, they only have $186 left over. Now, what I would ask them is like, hey, without increasing your income, so let's just ask some questions. Without increasing your income, do you think it's possible to help this person pay off their debt, right? And the your refers to actually this person, but I'm just saying your in general. So, I mean, let's say the income is exactly the same, right? 6,500. What can we do to help this person pay off this debt, right? And a lot of people will stare at this and just say something like, "Well, make more money," right? Which is totally valid, right? Obviously, make more money. But what if you didn't have more money, right? I mean, you make pretty good money right here. And so, what's probably going to happen if this is going to be a seven, let's say you make an extra $1,000, this is probably going to be a seven because the issue at this stage of life is not an income issue, it's a cash flow management issue, right? And so, when you ask people this, the typical person will say something like, make more income, right? Because that's the only thing that's in their toolbox or win the lottery, right? So if you look at this and you see all this debt here, I mean, if I made this much money and I only had $200 left over in my savings account, I would freak out, right? Now, what I would say is, hey, let's say as a homeowner, you might have access to something called a home equity line of credit. Have you ever heard about that? Right? It's well, do you know what a line of credit is? Right? So all it is financial tool where you could borrow money, pay it back, and then use it over and over again. Okay. And so banks, they actually tend to lend a lot of money if you have something called equity in your home. And if you don't know what that is, all that is the value of your home, right? So if you're going to put a for sale sign today, the value of your home minus all the debts. So for example, let's say that we have a $200,000 loan, but it's a $300,000 house. You have $100,000 equity, and banks are willing to lend like 80% of it usually. Now let's just assume that we have access to a $100,000 line of credit, right? Let's just do this. Okay, so what we're going to do is make the focus of our operations in the line of credit, right? That's where our focus is. We're not paying things out of our checking account anymore. So what we're going to do is put our entire paycheck into the line of credit, take out the expenses, and rinse and repeat over and over again. And take a look at this. So let's do this, right? So what we're going to do is just transfer this debt. This is $93,000 of debt, okay? $93,000 of debt. And then what we're going to do is put see how much cash flow we get simply just by doing a debt transfer, okay? All right, so this is going to be 0, 0, 0, 0, 0. Take a look at this. We've kind of almost decreased our expenses by $3,000. That's crazy. And we're not going to have any savings right now because our cash flow is going to reduce our debt. So it'd be C2 minus C3, right? And so now, again, let me just go ahead and take this away for now. Let's go ahead and reduce the debt by our cash flow. So I2, and actually we're going to include the interest, but there's no interest in month zero yet, minus 3308.9, right? And then so the next month will approximately be 89 grand. And then they'll charge you interest. And if you don't know the interest formula, just take the average of these two, multiply by the interest rate, so that's zero point 0.1, and then divided by 12 to get the monthly interest, right? 0.1 is the annual interest. You 0.12 divide by 12 is the monthly interest. And then all we have to do is just rinse and repeat over and over again, right? So in this scenario, if we had, let's say, more than a couple $100 emergency, we'd kind of be screwed, right? But in this scenario, right, we have immediate relief. And so at any time during the process, as we're paying down our debt, um, we have enough cushion based on the availability of our credit line, right? So if we have a $400 emergency, okay, it's just gonna pay delay the payoff of our debt a little bit slightly, but we just keep going and rinsing and repeating, and then doing it until this turns red. So let's just keep going. All right. So now we paid off the debt at this stage, and then we just do K2, K3 plus 1. And then we just rinse and repeat. And how many months did it take us? About 32 months to pay off all this debt. So that's how much in debt? 93K? Yeah, 93K in debt and 32. So what's 32 divided by 12? That's 2.6 years to pay off 93K in debt. 2.6 years to pay off 93K of debt, right? And so I know there are plenty of people who have that much, probably in student loans around that much, and they're freaking out because they've been paying forever and they're broke, and then they need deferrals. And you know what happens when student loan deferrals happens? Yeah, you don't have the payment anymore, but the interest keeps accruing, right? And so again, would I rather put my entire paycheck in and still keep maintain control of my cash flow? We increased our cash flow to 3 grand, 186 to 3 grand, pretty much, right? Insane, without really doing anything. And all we did is just make our line of credit as the main focus of our life, of our pay, of our what's it called, of our financial life, right? And the way this strategy is called velocity banking. And again, I'm talking about the whole, and then I could tell you that the tool to create the whole is called the drill, aka velocity banking. So you don't have to tell people like, hey, do you know what velocity banking is? What I would do is, if I were going to explain it to somebody else, just show this budget, and just, hey, ask them a question. Hey, like, if you were going to pay, help this person, how can you give them an easy way to pay off the debt without changing their lifestyle or without making more income? And a lot of people are so focused on that word velocity banking that they're way more interested in showing, hey, this is a drill, rather than showing how do you get the hole, right? You want to show them how to get the hole, and whether you do it through a drill or not doesn't really matter, right? It's just how did you get there, and then you could tell them what the name of the actual tool is. So that's it for today. We'll make it quick. And so this is just a quick way to introduce velocity banking to other people. Does it really work? You tell me. If let's say I just don't show this, right? So I'm going to go ahead and delete this. Again, is there, is there an easy way for me to pay off this debt without doing any or increasing my income? And the answer is I don't know. Then let me just show you a way. Hence, this is how we do it. And so, yeah, I'll say yes, it does work. But if you have a better way, let me know. All right, so this is Korean Atlanta Mentorship. If you're interested in joining our group, learning about not only velocity banking, financial literacy, real estate investing, education, go ahead and click the link down below to join our group, and we'll get on one-on-one Zoom call. Other than that, what day is today? Thursday. Oh my gosh, it's Friday tomorrow, and we'll just keep chugging along and making more videos and Road to 2,000. I don't know if you ever watched Tyrone Magnus, but he always says like Road to 1 million subs. Woo! All right, so I'll just say something like that. Road to 2,000 subs. Woo! I don't know if I even do the woos right, but whatever. All right, bye everybody.